Welcome back. Now, the South African Revenue Service has announced that July 15th is the start of the 2024 e-filing tax season for provisional and non-provisional taxpayers who are required to file in a tax return form. Now, SARS has announced that the pool of taxpayers who will be auto-assessed will increase to about 4.8 million this year compared to about 3.8 million taxpayers last year. Taxpayers whose contact details, including an email address or cell phone number, as well as banking details have changed, have been encouraged to update these details on the eFiling or SARS Mobi app to facilitate an easy and seamless filing season. Now, the SARS Commissioner Edward Kieswetter joins us now for an opportunity to elaborate on the 2024 tax season as it kicks off. Edward, thanks so much for your time. Welcome to Morning Live.
Good morning, Sakina. Good to be here.
When we see you, we know it's that time of the year, not only, but I guess, you know, we do appreciate these opportunities because there's always questions that need to be answered. So the South African Revenue Service has implemented significant updates that are, of course, aimed at simplifying tax compliance for all of us. But let's elaborate on some of the changes that have kicked in.
Well, so first of all, before I get to the auto assessment, there was a number of legal requirements that has changed, some of which created opportunities for taxpayers to make additional claims. So, for example, the solar rebate that now has run its course. So we have updated our individual income tax process to accommodate and make the reporting of that easy. There's also the pro rata deduction in respect of contribution to retirement funds that we've updated, the exemptions in terms of the amounts that have been accrued in respect of tax-free savings investment. There are certainly deductions allowed in respect of the erection or improvement of buildings in urban development zones. These are some of the enhancements that would impact on some of the taxpayers. And the reason why we update the system is we really have moved away from manual returns. And so taxpayers are encouraged to use our online platform, or if those who absolutely have to, come to our office and we will capture that electronically. And especially here, some of the older people or people who are not able to make this transition to electronic filing. Specifically focusing on auto assessment. Auto assessment is in line with our objective to increasingly make the fulfillment of obligations for taxpayers seamless. This year, we have expanded the universe from 3.8 to 4.8 million people who will be auto-assessed. Let me just explain for the listeners what auto-assessment means. Auto-assessment means you don't have to do anything. That's the good news. What it means is SARS will use all of the third-party data available. So, for example, we have over 19 million IRP5 forms. We have the return from over 370,000 employers. We have information from the banks in terms of interest that has been earned, from contribution to pension funds, from contribution to medical aids. These are examples of, so over 150 million records that we have. We then take this information and using machine learning algorithms and our risk engine, we were able to provide a taxpayer the assessment outcome without them having to do anything. And this year, 4.8 million taxpayers will benefit from this. And this is a huge improvement from last year. It's 1 million more. And what happens then is taxpayers progressively, as of this morning, we've already issued 750,000. Taxpayers will progressively be notified by us through an SMS or through an email, depending on the contact detail of choice. They'll be told that there is an assessment outcome ready. They then log on either using their Mobi app or they go into the e-filing system. They'll be presented with a completed assessment the outcome thereof, which if they accept, they don't have to do anything. Just to remind listeners that last year, 97% of individuals whom we presented with an auto assessment accepted the assessment without any changes. 3% chose to edit their returns, and that's the second important component. Taxpayers are allowed to update any information they believe we may not have had. What are examples of such information? Some taxpayers may pay medical aid that is beyond the medical expenses that have gone through their medical aid, but legitimate expenses that can be claimed. Some may have disability allowances, and others may have travel logs. All of these are information that they are then allowed to update, and it's as simple as taking a screenshot of the document, uploading it on their phone or on the eFiling platform, and submitting it to us. When they submit additional information to us, they will literally be assessed and be provided with an assessment outcome in under 5 seconds. So almost instantaneously, they'll get the result of that. And then if they are not selected for any further verification, they also will receive their refunds in under 72 hours. So it's a very, very minute exception that will then be selected for further verification before we can process their refunds. So that's a significant enhancement. And we're hoping that for almost 5 million taxpayers this year, individual taxpayers, the fulfillment of the obligation will be a non-event.
So does this apply to all taxpayers, independent contractors, for example, businesses? The auto assessments, are these done for everyone?
So this is done for anyone who has paid individual, not company taxes, individual taxes. So that would be income that is derived from employment, income that is derived from investment, income that is derived from rental income, or income that qualifies under the individual income tax provision. So that does not, for example, include VAT, it does not include corporate income taxes. Trusts can submit their returns from the 16th of September, and all taxpayers can, regardless of whether they have been auto-assessed or not, can from the 15th of July also submit their returns. So this is primarily focused on individual taxpayers.
And then, of course, there's the issue with the two-pot system. And those who plan, Edward, to tap into their retirement savings under the two-pot system, how will that be taxed?
So the two-pot system basically makes provision for taxpayers to draw from. Now, let me first go back and say, remember when you pay of your income over into a retirement fund, it is not taxed. And or into a retirement annuity, it's not taxed. When you then draw from that via the two-pot system, then you will receive the amount that you withdraw less the tax that is applicable based on your tax rate. If your tax rate, because of the amount that you withdraw, goes into a higher bracket, the higher bracket will apply in the way that tax is normally calculated. So taxpayers have to be aware that the amount that they actually withdraw will be paid to them less the tax that is payable or that is due.
Oh, just another one to squeeze in, Edward, before we run out of time. With regard to crypto traders and crypto-related assets. Now, from my understanding, historically, those trading in these assets have been reticent to declare any profits. So can you just give us clarity with regard to that?
So you will recall a few years ago, about three years ago or so, we sent out a notice to taxpayers that up until any further legislative changes, any investment in crypto assets any capital gain from a crypto asset invested, or any income from the capital from a crypto asset will be taxed in the same way that income or capital gains are taxed, which also means that you have to hold a crypto asset for more than 3 years for it to qualify as a capital gain. If you buy and sell crypto assets, then whatever gain you make is treated as income. So that's the main distinction. What we have asked for in the meantime is that all exchanges who trade in crypto assets register as crypto asset exchanges, and all individuals who buy crypto assets either for investment purposes or for trading purposes include that in their normal income tax. Currently, South Africa co-chairs an OECD international work group to look at crypto asset reporting framework. That will then bring up to date an international standard by which the reporting of crypto assets will be managed around the world, OECD countries setting that standard. But until such time, taxpayers can use the normal framework for income tax and just, as I explained earlier on, include income or capital gains into their annual return as part of their consolidation. So they may earn 100,000 Rand through their normal employment a year, or 500,000, whatever that is. If they've also earned money and converted it into the conversion into rands will then be imputed into the taxable income. Now that's also important because that may also trigger them into a higher tax bracket, so taxpayers must just be aware of that.
Commissioner Edward Kieswetter, thanks so much for your time and clarifying some of those matters for us. And that is our SARS Commissioner Edward Kieswetter speaking to us about the 2024 tax filing season, which kicks off this month.